Today we're going to look at the BTCI NEOS Bitcoin Covered Call Fund, and we're going to explore why so far this is my favorite Bitcoin Covered Call Fund, and maybe if some of this investment may make sense for you. Now, as usual, none of this is financial advice. I'm definitely not a financial advisor.
Knowledge.
Now, in this video, I'm assuming you know what Bitcoin is. I'm assuming you know what covered calls are. So we're not going to go over that type of thing. If you're watching a covered call ETF video, you can Google a different video for that. We're going to get into some of the holdings today, a little look at their strategy, and see if this may make sense for you. Now, BTCI, NEOS has a lot of other great ETFs, in my opinion. You have SPY-I, QQQQI, IWMI, and a lot of other type of funds generating covered call funds. Now, this fund fluctuates about 27 to 28% distribution rate, which is really awesome, high income, and also has a 0.98 expense ratio, which is pretty high but normal for these covered call funds. When we look at the BTCI fact sheet, how they actually use this strategy at BTCI, you can see they hold a lot of treasury bills, 70%, the VanEck Bitcoin Fund, which is the HODL ticker, and then you can see a lot of these CBTX, which these are actually call options, and they're creating a synthetic long using the strategy. If you watch the Armchair Income video, he describes how they can only hold a certain amount because of regulations. So what this covered call strategy looks like, if we look here, based on the stock price and based on selling a put and buying a call, you can create a synthetic long which mimics the long stock price, just holding the stock. If this doesn't make sense, let's look at it using a credit spread calculator and we can actually do it. So I have IBIT in here. We're going to buy an option. Let's just go about a month out. And we're going to buy a call. Let's do it around the current price, 62. So we bought a call. And now we're also going to write. We're going to sell a put at the same price, which is 62. And let's click on calculate. So when we look at this fund, this is a different way of saying this chart. The break-even point's a little farther down. But you can see it still has similar upside potential as holding the stock. So the nice thing about this is you can do this with a lot less entry cost. And then because of this, you can sell covered calls using this synthetic long position. So this is what they're doing. Mostly treasuries, a little bit of holding, actual HODL, and then using this option strategy to create a synthetic long, and then they're able to sell calls on that to generate the yield. And then this is how they get the high yields. Now, with the yields, if we look over here, I was checking into the return of capital. All this means is it's not technically a dividend. Return of capital looks like, let's say I bought a stock for $50, and then they gave me $1 back in return of capital from that dividend, right? So now my cost basis is $49 instead of $50. So what the return of capital does is decrease my cost basis till about zero, and then when I sell it, it calculates the best off that. So if I got $1, now it's at $49 and I bought at $50. If I sell the stock, I profited $1 because it calculates my cost basis as $49. So it's not technically a dividend, but these are really tax efficient because it's return of capital and I'm not actually taxed on that. You can see this is a 93% return of capital. They're typically in 93, 94. So it's very tax efficient and only about 6-7% of these distributions is taxed. So you can see here you got $1.25 return of capital, and the total was $1.29. So only 4 cents was actually really taxed out of this, which makes this a great income fund compared to if you were going to do this yourself. Hold IPIT, sell covered calls, you're going to get taxed really heavy because all those are short-term capital gains versus this is a return of capital. So this makes the BTCI fund really nice for those who want some income. Now, when we look at BTCI on TradingView, the reason I also really like this fund is because it actually holds its value and it doesn't experience intense NAV erosion. Yes, covered call funds typically go down over time. You can see over here, Bitcoin has been doing nothing. Let's add it to the chart. Bitcoin hasn't really been doing much since July 25th. It's had some ups and downs, but you can see here BTCI has been trending downwards despite Bitcoin making slowly higher highs and now a lower low, but BTCI has been trending downwards. So a choppy market without dividends reinvested, it is going to trend downwards slightly. But you can see it still does track and it doesn't have terrible NAV erosion compared to other Bitcoin covered call funds. If we look at something like YBTC, without any dividends reinvested, you can see this one trends down heavy over time. It's actually minus 12% versus plus 12% and 63% for IBIT or BTC. Now, when we look at the dividends reinvested, it tracks pretty close. It can make higher highs and lower lows. But if you want to use this one for income, in my opinion, this is a more stable Bitcoin covered call fund to hold, since it doesn't have NAV erosion that quickly. So you can actually be confident in your purchase, and it should actually recover over time. As you can see here, during the dip, the tariff dip, it actually recovered pretty significantly. Let's see what this is. Covered about 40%. So this fund actually recovered 40% despite the tariff drop without any dividends reinvested. So this makes it a great fund, in my opinion, to not have to worry about NAV erosion. Now, why does BTCI make sense, personally, in my opinion? For me, I'm holding Bitcoin. I'm a Bitcoin maxi per se. It's most of my portfolio. It's been most of my portfolio for about 2 years now, right? And I've done really well just holding Bitcoin. Now, the idea is I can't really use my Bitcoin for income. I could sell covered calls on IBIT if I want, but then I have to actively manage that, and then I'm paying short-term capital gains. So I'm at a spot where I'd like some other income outside of my actual job and outside of these little things online. So BTCI makes sense. Because I'm bullish on Bitcoin, BTCI can actually appreciate in price, and it pays a dividend. So I have Bitcoin exposure in a slight way, and I actually get paid for having that Bitcoin exposure. So for me, this makes total sense to own BTCI for myself, as I want to have diversified income into a fund like this. Now, if you're a person who's not super bullish on Bitcoin, doesn't have any Bitcoin, it might make more sense just to have some Bitcoin in your portfolio, whether that's IBIT or actual Bitcoin. If you're not looking for a covered call fund to generate income, as you can see, even with dividends reinvested, Bitcoin's going to outperform. So really, it's a question of, do you want income, and then you have to pay a small amount of tax on the income, or do you just want Bitcoin exposure? I can't answer that for you. For me, I want some form of income now, and this is a more efficient way than selling covered calls on like IBIT positions. Plus, you need 100 shares, so that would be like $6,000 at this current filming just to sell one covered call. So is BTCI right for you? For me, this is the fund that makes the most sense to generate some income with a high distribution rate. $100,000 in this is about $27,000 per year as of now. It may decrease if Bitcoin has a bear market, but still, it's a great income with some money invested, and if you're bullish on Bitcoin. So for me, this fund is going to make sense. And what my current plan is, I'm actually DCing in to BTCI with my income. I don't plan on buying BTCI right now. Why? Because generally, Bitcoin is about to enter its 4-year cycle if we go based off typical cycles for Bitcoin, and we can look at this on a weekly chart. Everyone knows the 4-year Bitcoin cycle. 4 years up, 4 years down, and we're right about that 4-year period where Bitcoin typically has explosive moves. So I think Bitcoin will have less drawdown, but still I don't want to be fully allocated to BTCI to, let's say, if it drops back down to about the 75,000 level, that's my back up the truck and buy all I can, as you can see on my chart. So I'm slowly DCing into BTCI. I'm going to slowly DCA over the next year. That's my plan, to have a solid base, a low cost basis, and also hope BTCI recovers and then it can pay me a dividend, since I already have other actual Bitcoin in my other cold storage. So overall, BTCI can be a great covered call fund if you want Bitcoin exposure, if you want some income while holding that Bitcoin exposure. If you just want pure Bitcoin, if you don't have any in your wallet, it may make sense just to buy more Bitcoin. But overall, I'm going with BTCI to have some Bitcoin funds. If you want to check out, I compare BTCI, YBTC, and even BCCC to compare the best Bitcoin covered call funds and see which one may make sense for you. Check out this video right here. Peace, guys. God bless.